Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a fantastic Thursday so far. This is going to be our daily cryptocurrency market update, and this is going to be quite a technical update where we're really going to look at the Bitcoin chart, and I'm going to be explaining why it is that I believe Bitcoin is really in no man's land at the moment, and is probably going to chop for a bit. Ultimately, the overall consensus that I have for this market is that it continues to go down. I think markets and crypto, given its correlation with the equity market, certainly the NASDAQ, the S&P, markets don't do well in recessions, and I believe we are heading into a recession. And I think things get worse before they get better. You know, we think crypto survives and goes on to thrive. But in the meantime, I think we have to sort of roll with the punches. And this is going to be a very technical one because I'm going to be mapping out levels. We're in a really key area here that has very low volume, or it had very low volume on the way up, and is kind of inefficient in regards to price data. And Bitcoin really needs to hold the 20, 19, 18K range. Otherwise, there's another kind of area or pocket of inefficiency and low volume that we may, come down and revisit and actually smash through. Typically, these areas, when you've gone up in this kind of a fashion, and we'll drop down the time frames, don't provide amazing support and sort of good ground for footing, if you will, for the crypto space. So we'll be getting into that. I really want to start the video off. We've got quite a bit to get through in this video, but I really want to start the video off talking about the Fed minutes yesterday. Markets were very much stagnant, and I was expecting a bit more of a move than we got. But I think the lackluster price action, if we drop down the time frames, I mean, yesterday was brutal in terms of looking at this market to try and trade, because the honest answer is I wasn't sure. Ultimately, our overall thesis is that markets come down eventually, but there is always the room for a relief rally. And I mean, yesterday, you essentially just consolidated in, this was the Fed minutes that pushed this up, but you were essentially just consolidating in like a nearly 3% range, just going up and down and grinding slightly higher. Not the most bullish of sentiment. I think Bitcoin, for me to get bullish, really needs to sort of get back up and start to take out these levels here convincingly, hold them, and then we can look to push up to future levels. But as it stands right now, that isn't the case. I'm not in the business of betting against the trends right now, or the overall sort of macro downtrend, and it is very much a macro downtrend. But with the Fed minutes, this market was kind of stalling for it, and the Fed didn't really say anything unexpected. In fact, they said very much what we already knew. Markets at the moment, I think, took this as good news to a degree. No news is good news in a bearish kind of situation, and saw slight relief from it. I'm not convinced that this is particularly bullish structure, but it could turn out to be. There's no reason to suggest that this doesn't break to the upside. Could this be some sort of a rising wedge that you spill to the downside out of and come back down and test these lows? I think that is absolutely a possibility. We did see lots of heavy whale accumulation over here, so this does look like a short-term base. My overarching issue, though, is where Bitcoin currently is and the fact that it really is in no man's land. Good area, good possibility that you could just chop around this range, sort of making deviations to both the up and the downside. Traders will love that, ultimately for it then to spill to the downside. And we really are on a cliff edge in terms of, where Bitcoin is. And I'm going to show you that now. When I look for, certainly in the downtrend, and this is all price discovery for the large part, certainly from here onwards, I'm looking for areas that served as, there was a lot of volume and demand for on the way up, because they'll typically act as key levels on the way down. If you look at where Bitcoin currently is, it's in this kind of no man's land where you've got this area of consolidation here, and you've got a smaller area of consolidation up here, which is kind of capping you. Look how these are key levels, just looking at prior price history. You can see how this is a capping swing high, if you will, and you can see how you've got capped here. So you're very much in this kind of a range. Now, does that mean that we can't do something like this before we eventually spill? I think we will spill. And I think there's lots of similarities between this move over here, this broader move over here, and the one that we're currently in. Ultimately, I am bearish on the cryptocurrency market in the short term, but this is really key. And if you look at what happened here on the way up, price didn't really consolidate or have much action in this area. And typically, if you look at areas where price hasn't had much historic price action. And we'll switch to the 3-day so I can make this a little bit more simple. You don't tend to sort of consolidate there for a long period of time, and they offer very weak ground for footing. You'll often sort of smash through these areas like we did, maybe trade back into them, fill in a little bit of that inefficiency before then you continue to those lower prices. So if we look, you can see the areas of consolidation and support, typically, for example, this range here sort of found itself between, this kind of a scenario. I think we're in a similar situation today. And if you look at the areas like the prior one that we had of inefficiency, I'm not sure how many more times I want to say inefficiency in this video, but you can see inefficiency. We've got a big inefficiency under here, which is why I'm saying Bitcoin is really on a cliff's edge. Maybe we can do something. We form some sort of a falling wedge or something that maybe give us some sort of bullish confluence. But for now, it's key that we hold these levels, because you come back in here, and certainly if you take, the sort of 17,700 level, 17,700 level, you've got huge area of downturn. And if we've looked how this market's essentially reacted thus far, you can see once you fell out of here and you had this, you really capitulated. You capitulate and really slam through. This is a whole level of inefficiency. So we're very much on this cliff edge. I think we're largely just filling in a lot of price action that we should have had here. If we pull the volume chart up quickly, you can see as well, this sort of area here is very low volume. Good confirmation of the trend here that we had sort of increasing volume consistently. But the areas where we're currently at, and certainly if we overlay our volume by price index and we just go to March's high, you can see where we currently are, guys, in terms of price. Next to no volume here, or sort of price action. So we're just kind of filling things in. It's why I think Bitcoin finds itself in a little bit of a range-bound environment, a little bit of a no man's land. But ultimately, the issue that you've got is if you come back down into here, maybe we do something like this, we get one leg up, and then we see that pullback. Once you've taken out this previous price action, you've got a real open sort of trap door down here, if you will. And this is still very much a downtrend. Lots of people consistently calling for bottoms, but if you take a look at like the demand index, for example, what do you have since your highs? You've got a trending down market. You're also making consistent lower highs and lower lows on the money flow index, which is showing you the flow of money. If you look at, the demand index, if you look at your money flow index, very similar story. You're putting in new lows and new highs, whereas in adverse, you're not deviating from that. In the bull market, you can see, the opposite in shoes. And this is the kind of cause for concern that I have at the moment. It's not turned. Let's say we did something, and on some of these indexes we started to get back above this zero mark. Certainly for the demand index is one thing I'd watch. That might be the buy signal. And then when you come back below it, that's a sell signal. But for now, it's very lackluster. I'm not going to pull up the delta volume because I think we've covered quite a bit. It's very lackluster, and you're in this kind of no man's land, and you're very much on a cliff edge. And I think markets are really waiting to see, everyone's really pent up about a recession looming. I think we're basically already in a recession. I think it just gets worse. We've seen a huge drop in energy prices, which is something that I've looked at, spoke to my Patreon members about it. You got to remember, it is the summertime. Personally, as somebody who uses gas and oil, petrol, of course, is a different matter. Although people may choose to walk instead of drive, if it's not raining outside. But in terms of sort of resources, home commodities that you use at home, like gas, oil, whatever it may be, electricity, there's going to be a lesser demand for those given the fact that it's the weather's changed. And that's really going to have led, I think, to this sort of pullback. You can see it typically. It's very seasonal in many respects, but the problem is then do we go into winter where everyone needs it again, and that supply crunch sort of hits. So we're very much in a no man's land. It's kind of reiterating a lot of what I said yesterday, that I don't think these markets really know what they want to do yet. I think people are bullish. People are going, okay, well, we're at 2017's sort of high, so that's a significant area of support. It's a very significant level. We're holding it. We've got whales that have stepped in. The issue is, do we continue to hold it? And there is typically July is a good month. You know, as a reminder, first half of July are historically the two best weeks for the stock market in the entire year. Now, we have spoke about the possibility of a relief rally, given where the Nasdaq is in regards to its 200 weekly moving average. Since 2008, this has acted as support. There may be a bid up on that. The issue that we've got is, and for me, I'm really watching the tech sector, is, you know, you do react. A bounce is natural here, but then you have the kind of reality of a recession hits. And we did have the yield curve actually 2 days ago. Again, it inverted. That's not a good sign for markets generally. So I'm staying with the cautious over safe than sorry approach is really what I'm teaching here, because I see further capitulation. And so far, it's actually paid us. You know, we flipped. You know, we were extremely bullish even at the start of this year. But we very much flipped on Bitcoin around about your 40K level. So the low sort of levels down here, not the sort of lower end of 40K. So around about here is really where we were saying, look, guys, it's going to pay you to be cautious. And we were trying to get people out. Look at what's followed. You know, this has been an intense selling leg. Relief rallies are very natural to occur. You know, look at some of the relief rallies you had here. We've not really seen that to date. But we'll really see what unfolds. You know, I think people are looking too much at historical data when historically, you know, Bitcoin's only been around since 2008. So we've never had to endure a recession. And my worry and concern is, you know, do we end up in a recession, which I think we're going to, and is the price going to act similarly for the tech sector, which is very correlated with the cryptocurrency market, and really, you know, consolidate below this 200 weekly move around. You're still holding it for certainly the Nasdaq and the likes of the S&P. The issue that you've got is, you know, what happens when you capitulate through this. You know, I think that's going to bring crypto with it. It's not the best outlook, like I say. Lots of inefficiency in the chart because of just how impulsive this move was. Lackluster volume, certainly in regards to this pocket down here. Volume is, you know, very, very scarce. So it's certainly going to be interesting to see how things unfold. Just remember, guys, it's a very exciting time to be alive. You know, we had Boris Johnson, I think, has essentially resigned today after, I think, 50 plus members of his party resigned. It's a very uneasy situation, I think, across the board. And I think I was watching something the other day where he was going, look, are we heading into a recession? Are we heading into a hard time? And he kind of dodged the question like they all do, because they don't want to, you know, spook markets. But I think there's this element of people thinking we're not going into recession. I kind of don't see how one's avoidable. I think we're seeing unprecedented things. You know, if we look at the bond market, if we look at a number of other markets, I think that all leads to more capitulation, unfortunately. Now, if we look at the markets and how they've generally opened, the Asian markets catching a bit of a bid today. The UK market's catching a bid. You know, we've got the dollar slightly selling off, dollar putting new highs. People are running to the dollar for safety, guys, not, you know, really for anything else. We know intrinsically the dollar's going to gain momentum given the fact that interest rates inherently mean that you need more dollars to cover off the debt. But this was more of a fear reaction. And I don't think that's good. And I think there's a bit of a delayed response. And we looked at the dollar against Bitcoin yesterday, I believe. I think there's a bit of a delayed response. And really right now, what's driving this market on the short term is traders looking to, you know, play this range and you know, get that continuation to the upside. But the issue is if that deviates and then comes back down, the momentum's really going to be behind it. We also have the Ethereum Merge testnet, or the Ethereum test net merge, mostly successful. Hiccups will not delay the merge. I would not, you know, we've already seen some pretty catastrophic things take place on Ethereum and its ecosystem. I think they should make sure that there are no hiccups before they go to the merge, because it's a pretty crucial bit of, it's a pretty crucial hard fork that they're actually looking to undertake. And, you know, we'll see how things unfold. But this ultimately would be bullish in terms of, you know, taking a lot of the supply for Ethereum off the table, providing it goes to plan. For me, it still seems like a task that I can't even wrap my head around. Then again, I'm not a technical guy or really a developer. But when I think of how much is built on top of Ethereum, they all have to configure with this merge. And I think that's a mammoth task, to say the least, without something going wrong. So I'm kind of expecting something to happen with the Ethereum merge something to go wrong. But from a supply side of things, you know, Ethereum supply and its distribution, or its inflation, sorry, really gets cut, and the demand increases as people will be able to stake it. That is all I've got for you in this video, guys. Just stay safe out there. You know, I'm not trying to scare people right now. It's never been about scaring people. You know, I think in the long term, crypto is going to do very well. You know, I'm a big believer that Bitcoin gets above and beyond 100K eventually, and you know, and then some. But I think in the short term, we're just in this real area of stagnation in terms of, you know, money coming in and out to move markets. But I think that eventually comes, and that's going to be probably fear driven. That's all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated, so as a comment, and I'll catch each and every one of you in the next YouTube video. Have a fantastic day, and I'll see you in the next one.